We should be on YouTube and Rumble. And Bree, are you dropping that link into our various Rumble and Twitter chats? Okay, Knox is working with you on that. If you guys are tuning in, we're actually live on our Twitter Spaces, Business Makers handle, Business Makers at Business Makers. We're also live on. Are we live? Video live on my own Twitter. We couldn't get that set up. And then we're live on Rumble, and we're live on YouTube and Facebook. Okay, very good. For those who are just now tuning in or who don't know, we started a Business Maker show, Business Maker podcast. I'm very excited about this, and the reason why we did this is because there's actually, the Fight Laugh Feast network is surrounded by a lot of business owners, a lot of talented entrepreneurs, a lot of business leaders, and of course that's why we do our Business Makers pre-conference at our Fight Laugh Feast conference now, is because there's just a lot of energy and excitement around kind of like-minded fellowship within what God is doing through Fight Laugh Feast network. And so this Business Makers podcast is going to drop every Monday. Every Monday, Business Makers will drop every Monday, and we're interviewing leaders and the business community, CEOs, venture capital, other sort of crowdfunding investment companies, in all sorts of a variety of people involved in the business world. So make sure you guys tune in every Monday for that. And then on Fridays, about 10:15 Pacific time, we're going to be going live on Twitter Spaces and YouTube and Rumble and Facebook and so forth. So that's where we're at today. I hope you guys can hear everything. If there's any problem, make sure you flag. If you're on Twitter Spaces and you want to ask a question, you have to share the show first. So you actually have to share the show on Twitter Spaces before I'm going to let you in the room. That's Knox's requirement for me. So Chuck Knox told me that you don't let anybody in. Hey, I got some claps there. Way to go, Ellie. So guys, I wanted to pick up where we kind of left off in our conversation on the podcast. What are some of when you guys, so for those who don't know Vicinity Capital, they're basically in Josh and Wilson, you guys can correct me on this. You're basically a crowdfunding investment platform for investing into companies. Why don't you correct me before we get any further first?
Yeah, that's a good start. We basically are focused on helping with investors into local projects, whether that be real estate or growing businesses, and we play that intermediary role to serve something up on a platform and have people be able to connect to businesses and projects that they're interested in investing in.
And a lot of our listeners, actually, we have a friend who's doing a project through Start Engine, a corporate partner, actually doing a project through Start Engine. And a lot of our listeners are familiar with probably more Start Engine, just because we found out about it recently. And so basically, Vicinity Capital is similar to Start Engine, although there's a massive, very big distinctions there, what's going on. But where Vicinity allows investors to log into their website and you don't have to have $1 million. You don't have to have $5 million. You can have, depending on the project, your minimum buy-in might be 5,000 or 1,000 or 500, depending on the project. So it helps the little guy like me be able to invest. And the thing I like about you guys is you guys actually have a vetting process that's made so far your investments very successful. I actually want to talk about what's your vetting process for when a company comes to you, or you look at a company that you guys want to bring on your platform for potential investment. How do you guys vet companies to participate in Vicinity Capital?
Yeah, it falls into 4 buckets, really. One is what's the story? What is the business doing? Is it resonating? Is it solving a problem? That's a little vague, but effectively leveraging business experience we've had starting businesses, working with a lot. Do they have something that's actually going to be an appealing message to the market and understandable by the market through us? So that's one. Number 2 would be the team. Do they have the right people to pull it off? Mm-hmm. So not only is it the right story, is it the right time, but do they have the people that can actually execute on it? And so understanding their background, understanding their involvement, their interest, their skin in the game. All of that is part of that piece. Third would be the investment structure and terms. Is it interesting? Is what we're going to come up with to present out to the public. Is this something that, even if they love you and they love the story, is this a worthy investment that's going to attract the dollars to pull off the raise? And then fourth is, you can call those the main three that we say, okay, we can start to figure out how to work together here. The fourth would be what we'll call lead investment. Are there dollars and capital that's around you in your existing network that maybe has wanted to invest or would be interested? They just need that partnership to help a business do something that they don't typically do, which is raising capital. You might do this maybe a couple times, but this is what we live and breathe. So do you have those people around you that would be that early network to build momentum? If those four things are there, then it's typically a pretty strong play to use Reg CF and partner with us.
Yeah. What are some like success stories? You guys, how long you've been around, and what are some success stories of you guys been able to help fund and actually start returning an ROI back to your crowdfunders?
Yeah, so the industry is about 7 years old, so it's fairly new. We've been in it for about 4 years, and the early part of that is getting registered with FINRA, building the technology, the fun startup stuff that a lot of businesses have to go through. But then as we're starting to host offerings, at this point we've done 15. It's still early. With a lot of equity deals, you wouldn't expect a major return, or real estate deal, you wouldn't expect a whole lot yet. So a lot of this is raise the capital, see how they're doing early on, but no major exits. Really, that's largely for the space. Because it's a new space, there's a lot of companies that have raised capital this way, but we haven't seen a broad spectrum of those returns coming to full fruition. However, what we have seen are some of the real estate projects we've done strongly benefit from the community coming around them, not only with the capital to get them through a redevelopment, but also having people that are influencers in the community and able to help when things are needed, or find tenants and those that could fill the retail space, as well as the apartments that you're building. Whatever that is, you start to see some of those things come together and work to get them across the finish line, where they're open, they're producing revenue, they're able to start making quarterly payments. So some of those that have either a preferred return or a debt structure, they've been making their regular payments. They've been starting to pay back investors and get on that track that will likely go for the next handful of years while they fully realize their returns.
You mentioned payments. So companies could work with you guys where, let's say, investors put up whatever the request is, $1 million, and it's basically some sort of investment loan is what the request is. And then they could pay back that loan plus interest. Obviously, it's probably healthy interest. Am I understanding that correctly?
Yeah, some of those. So there's two different types of debt structures that we've done. A lot of what we do is going to be more equity type deals, but there's two different types of debt structures we've done. One is a revenue share, which is a really interesting form of debt financing, where the business is committing a set percentage of their revenue every quarter to pay back investors a multiple of what they're raising. So let's say it's a 2 times multiple. So you invest $10,000, you expect to get $20,000 back, and they're going to pay that back as a percentage of their revenue. So if they're booming, you get bigger payments. If they're in a slow season, you get smaller payments. But it's a flexible term for the business, and one that can incentivize participation and growth, and that flexibility is really helpful. But it usually has a pretty decent multiple, where you're making a good, if you were to calculate out what an interest rate might be on that, it would be pretty strong. The other one would be more of a typical term loan, where you're setting a percentage interest rate and you're raising capital that way. We've seen those for a really cool one is like a community amenity. So we've had a group of neighborhoods that wanted to build a community pool, like a membership model pool. And they raised over $1 million from like one zip code to help pull off the community pool. We have others that want to do like a pickleball complex and try to raise capital in a similar way. So there's all kinds of really interesting ideas you can do on that side. I would tend to say those aren't super typical, but there's also a lot of those interesting projects going on in communities. I'd say what's more standard are real estate projects or businesses where you might be getting a
Right.
preferred return, you might be getting cash flows, but there's also that upside of some future disposition or exit event.
Uh-huh. Do you guys, as part of your process, also giving out, handing out, whatever you want to call it, distributions? Those
Yes, so
distributions very much part of the process.
right, we help with that. So both the capital raise, but then we have an ongoing relationship with the business owners to help facilitate investor communications, tax forms, distributions when it's time to make payments. All of that is something that we're able to facilitate as a service to both the issuer and the investor.
Kind of looking at our current economy, the next couple of years, how would you be, how are you thinking about things? How would you kind of encourage our listeners to kind of think through how to invest, what businesses to start up even? I know that's a big question, but there's various demographics within those questions that are kind of thinking through the economy. I mean, we just got another jobs report out where it wasn't a shiny jobs report again. How are we kind of thinking about these next year, 2, 3 kind of thing?
That's a good question and hard in some ways, but I always look at these times. There's a lot of really interesting opportunities that come up when you have these situations. So one, there's a lot more honesty. I think there's a lot of things that were sort of floated with crazy money, crazy valuations, just crazy times where it was really hard to fail. Well, now there's been a bit of a reckoning that'll continue. But I do think that it exposes some really interesting new opportunities for businesses or for participating in things that you otherwise wouldn't really have thought of. So from an investing standpoint, one, I'm not an investment advisor. And so I can't give specific investment advice, nor should I. But I think some things that are interesting to just keep an eye on are you just have to kind of face the reality of what's going on. There is high inflation. There are a lot of market dynamics at force that put a lot of things at risk. And so to be active with your money, I think of talents and trying to be good stewards with what you have and move them forward. You have to think of ways to place your capital where it has, you'll always take risks. You have to take those risks no matter what you're doing. Putting it in your bank account is a risk, not maybe a risk of loss, but it's constantly just depreciating. So you have all of these ways that you need to be thinking about your capital, how you spread it, and then where you want to take your calculated risks. So that would be a broad statement on thinking about investing. So looking for those opportunities, looking for the markets, the areas of your community where there's some good growth and you want to take a chance there. That's really where we focus. What are the communities that are growing, that have some really good foundation blocks for continued growth and resilience? And then how can you become a part of that resilience and part of that growth in ways that make sense for you and that you can get excited by? Yeah, go ahead.
Yeah, I've always found like going after investment money a little daunting in the sense that, paperwork, keeping track of who invested in my company. How do I, as a small, business owner who's got great ideas and, a lot of upside on some of the endeavors I'm working in. I'm not gifted at kind of like the accounting side of the investment, if that makes sense.
Yeah.
How, going after mom and pop kind of investors, mom, dad, family, friends of family, stuff like that, you want to do them well, you want to take care of them, you want to make sure you track everything. But that to me seems like the daunting side of investment.
I think it is. That's a good point. It's something that we should sober-mindedly approach. If you're thinking about raising capital, how are you going to be good stewards of your investors? One, if they're close to you, that's a burden. That is hard. I would much rather lose my own money than somebody else's money, especially if it's somebody really close to me. So you want to be able to take care of them well. Having self-awareness of what you're good at, what you're not is key. And then finding people who can help build out that team. So we like to view anybody that we're partnering with on a business side where they're looking to raise capital. We try to view ourselves as that partner. If we believe we can add value in the way you're thinking about your offering, the way you're looking at continuing to take care of people when business is getting really busy and you need somebody to help engage your investors and maintain those communications and help with distributions and double check the calculations, all of that stuff is kind of daunting, and it's an area that we know that we can be helpful with when we're working with a business.
Let me run a case study with you.
Okay.
If you were Elon and you bought Twitter for $44 billion, how do you turn that into an ROI?
That's I mean, really with those types of things, with anything that's with a valuation, you're always looking to add a multiple on top of that valuation and have some sort of exit event. So how do you turn that 40 into 140 and then have another transaction where somebody's able to, to exit and benefit from it?
Well, but let's keep it the case. Elon doesn't want to sell it. Elon doesn't want to sell it. He wants to basically, he bought it for $44 billion. He plans on keeping it. And then apparently he got some banks to go in with him on the investment. How do you take what you just did and turn it into an ROI, distributions, all that stuff?
Yeah, this will expose my ignorance on some of the big market happenings that are going on with Elon and whatnot. As interesting of a guy as he is and what he does, I'm not sure, but typically you got to find either a way to make some strong cash flows. That's if you've got banks in, and I don't know if that's a debt structure or if they're equity investors, they're looking for some sort of cash flows or opportunities to even exit their position, even if Elon's not. And then ultimately there's a strategic component to this too, right? Elon's not doing this just for Twitter or X or whatever we're calling it nowadays. He's doing it for the ways that it can actually fuel and throttle a variety of interests and endeavors and business relationships there. So a lot there that I'm sure I don't know on his master plan of how he's looking to really make this worthwhile.
Wilson, I'm going to ask you that same question here in a second. As you guys,
Wilson probably has a better answer.
Okay, as you guys are tuning in, if you, especially on Twitter Spaces, which is where I'm following, if you want to ask a question, just raise your hand. I can bring you in to this conversation. And then on, I think, Bree, are you monitoring some of the other people that might be coming in through Restream? Okay. And if you want to come in through Restream, Bree will be monitoring that. So if you have any questions, do we have someone? Pardon me? StreamYard. Yeah, I always get it backwards. StreamYard. Make sure you guys flag in StreamYard if you want to come in and ask some questions. Actually, I got Ellie from Twitter Spaces. Let me see if I can bring her in. This is my first time actually really do this. Let me see here. Do I invite as a co-host? Is that what I do, Bree? Do I invite as a co-host here? Add as a speaker? I'll add as a speaker. That's what I'm gonna do. I'm gonna add Ellie as a speaker. Ellie, you should be able to hear us now. Can you hear us? Come on in. You're on mute.
Yes. Hey. Can you guys hear me okay?
Ellie on Twitter Spaces. Give us your best shot at Josh and Wilson. Go ahead.
Okay, first, just a quick correction. It's just L, not Ellie. It's a French word because Knox always calls me Ellie. It's L.
Yeah.
So
you should spell it like an American would spell it then.
Yeah. So Josh and Wilson, my question is, can you guys for us what would be the ideal person you would want to work with? So in other businesses, they talk about their client or ideal business partner, ideal customer. So I'm curious if you can paint what's that perfect client. What do they look like? Yeah, if you can go on that.
That's nice.
Great question. Wilson, you want to give your presentation on that as a newer entrant into the Vicinity world?
But start to take a stab at that a little bit. So when it comes to founder profile, I think there's going to be a difference between somebody who's doing a real estate project or a super early stage business or a growing business who needs growth capital. But the ICP, if you will, or ICP, if you will, of a founder still has some of the similar overlapping characteristics of a founder who has a lot of skin in the game, has aligned incentives with the investors that they are offering a deal to. So that's a big part of what we do, is make sure that any offering has a success scenario where a founder who is putting his or her blood, sweat, and tears into a project has an outcome that can be aligned in success with their investors. So that's huge. Subject matter expertise can be big. There's a lot of secondary principles that have various weightings to them, where you might have really awesome subject matter expert who doesn't have the background or business acumen, but if you can fill that gap with some key mentors or partners, for example, that checks that box. And then vice versa is true too. So I'd say there's a subjective analysis on some of the qualities and characteristics of a founder, but the full bore skin in the game, aligned incentives with investors, those are some of the high level things that we're looking for.
I can add one piece to it as well. I think for us in particular, the community appeal, this also could fall into a subjective category, but is this something that in its particular area of service that just makes sense, where it's going to be interesting to those that it's serving, or that are already customers, or they're living around, whether it's a real estate project or a business? Is that going to be something where I say, wow, I want this here? And it helps basically turn people who want it there, who also are looking to invest, into vested brand ambassadors. They become people who can support it and sort of create a self-fulfilling prophecy, where you have those that want you to exist also being those that are going to support your project on the operational side going forward. Those are like a no-brainer, exciting, easy to work with types of plays that also, what Wilson is saying, would overlap. So or would lay into that as well.
What would you guys bring like a let's say you got a really smart, intelligent founder who's bad at marketing and sales, or bad at marketing and product development, whatever, do you guys bring in subject matter experts to help the company, or bring in people who could actually be involved in growing the company?
Yeah, not formally, but I do think one of the advantages that I believe we have, in the same way that I think an investor has certain advantages investing locally where they wouldn't investing far away, I think we have a similar advantage with those that we work with, where there's a lot of overlapping networks of experts and just talent and vested interest across the board, to where a lot of times we could say, hey, you know what you're talking about makes a lot of sense. Let me make this connection over here. But as part of a formal part of our process, no. But a lot of things can happen sort of organically that become really interesting and exciting as we work with people.
Yeah, interesting. Because it seems like, especially in the startup world, I mean, I don't know how much you guys work with startups, but especially in the startup world, that's what you find. Is you find like some guy who just like figured out the secret sauce, and is super gifted at the vision and the direction the company could go, but then there's massive weaknesses on, let's say, the marketing side, or especially the sales side.
That can be a benefit of doing a public raise. You will find and collect stakeholders along the way. So somebody who has a very compelling offering, even as a solo founder, gets some pre-seed or seed capital through doing something like this, may find those complementary pieces through the PR and marketing benefits that they receive from putting their company and their raise out there publicly. So,
yeah, interesting. How do you one of the reasons why we started Business Makers and what we're trying to do here is because, it's been my view. So I'm 44 years old. I was born in 79. And I think my dad's generation was a hard-working generation, but job security was like primary. Because also you think their parents came out of 30s and 40s, where job security was pretty difficult.
Right, silent generation folks, yeah.
Pardon me?
Yeah, like their parents, like the silent generation dynamic is really interesting. So
yeah. And so, but I think what happened during kind of my growing up years, my dad's generation, is they just went to work for job security, and didn't take risk, and didn't, become entrepreneurs, and didn't, that kind of, I don't know. What's y'all's take on that? I still, like, I started been thinking about this about 6 months ago is when this kind of thought process started kicking in. But like, what's y'all's take on kind of it? We're in this world where it seems to me that a lot of the liberals went and built the infrastructure, took the risk, that kind of thing. Of course, a lot of conservatives have. I'm not saying that at all, but that's why the liberals kind of own the media right now, own the education systems right now, own a lot of big tech infrastructure, is because they took dominion, they took risks, and we went to work for them.
Yeah, conservatives have done a very poor job of capital raising in startup businesses. So, we've inherited a lot of things, whether it's some of the dynamics you're describing of your parents' parents and this more, conservative in that economic sense era of thinking. I know you talk a lot about culture being, downstream from worship, but we all talk about that. But in a lot of ways, we unfortunately act like in business that all of that is downstream from profit sometimes as conservatives who still hold that business ideal at a certain level. So something the liberals have done very well is basically mobilizing their community to support each other with capital. And if that's something that we can figure out and be more, there's a risk tolerance aspect of it. There's also the just the behavior of how we support our actions with dollars. We may have businesses who are funded locally rather than actually giving up controlling shares of our businesses to the funds and the folks that don't have the aligned values. So ultimately, this is a huge part of the puzzle in terms of the economy that you're talking about that we need to do some work in, I think.
That's helpful. Well, Josh and Wilson, thank you guys so much for coming on Business Makers and our live spaces. Also, not only so we actually got a show, Business Makers. I recorded a show earlier with Josh and Wilson that'll drop Monday. Business Makers podcast will be dropping every Monday, so be ready for that. It's going to be an exciting time. Really grateful for you guys tuning in and giving us your time and your expertise.
Thanks for having us. Good talking to you, Gabe.
Yeah. You mute us, Bree. Cut us off.